Welcome back. This is the most important session, students. Here we are going to talk about basics of personal finance. So please pay a lot of attention to this particular module among all the other modules, because here we are going to lay the foundation, and whatever we are going to talk about it, you can implement it for the next 20 to 30 years or 40 years, even for your lifetime. You can implement it, and you can also share it with your loved ones, like this particular module alone, the basics of personal finance. Let me go into that topic. So in the last video, you would have seen the typical vicious cycle of the vicious cycle of a human person. So here I'm going to talk about the same thing in a slightly different manner, called a human life cycle. So first 22 years we spend most of the time on education. That's where you and I right now are. Sorry, please edit this one. Start from here. So this is the most important topic. Let's start with human life cycle. We saw in the previous video about that vicious cycle of of a human being. That's what we saw. It is the same depiction, slightly given differently. Here we are talking about first 22 years. You are focusing on education. After bachelor's degree, some of you may intend to do MBA degree. Then what will happen is you will start earning. After age 22, 24, you will start earning. You will start making money. That earning years will be for next 38 years. I'm talking about 22 plus 38 is 60 years. I'm talking about 60 years. And during this 38-year period, what will happen is there will be marriage, there will be childbirth, you will buy an apartment, there will be child's education and child marriage. After 60, what will happen is there is something called your golden period will start. It's called the post-retirement. Now today we are talking about 30 plus years. At this point in time, we are talking about 30 plus years. Now what happens is some of you will start earning little early. For example, some of you who are into social media like YouTube and all that stuff, LinkedIn, marketing and all that stuff, you can start creating wealth at a younger age, or sports person or actors. You will start earning money much before 22. But most of us will start making money. The most of the wealth creation or wealth accumulation will go up to the age of 50. Because after that, what will happen is, after 50, these two things will happen. So major expenses, sending your children abroad or getting them married and all that stuff, you will start distributing. This is where it will happen. And what is very important is, here you should take calculated risks. And here you should not be investing in products like insurance and all that stuff, where the return on investment is very, very less. I'm talking about during your younger age. Whereas you can take pure term insurance and all that stuff, absolutely fine. You cannot take whole life policies during your young age. And at some point in time, what will happen here is, you will be talking about wealth preservation and wealth distribution. What happens is, you're going to live longer. So wealth preservation and distribution has to be there. And there will be only cash outflows will be there. Here there will be only cash outflows will be there. There won't be any inflow over here at this point in time. And that's going to be for 30 long years. So this is what is very, very important that you should be noting about. Unfortunately, what's happening is earlier we used to think about retiring at the age of 60. But thanks to robotics, thanks to automation and thanks to technology, what has happened is now people are being laid off at the age of 45 and 50 and all that stuff, which means that you are going to work only for 25 years. And you are going to spend more than 30 plus years into retirement. Now, if you are an entrepreneur, what happens is your business model keeps changing. In one of my modules, I'll be talking about Nokia, BlackBerry. I'm going to talk about touch phone, Android phones, iPhone and all that stuff. What will happen is, if you are an entrepreneur, innovation is very, very important. So that is also is going to play a vital role. So I'm going to talk about basics of personal finance, looking at our human life cycle. And in the previous video, we talked about power of compounding. We only saw about the US example. Now I'm going to talk about one Indian example. What happened was, somebody who started at the age of I'm talking about 1968 to 2008. Okay, this person started saving between 1968 to 2008 over a period of 40 years, not more than that, 40 years. He started with 10 paisa per day, then he increased to 50 paisa, then he increased to 1 rupee, then he increased to 5 rupees. not more than that. Okay. At some point in time, what happened is the total amount of investment was only 14,600. What happened is, because of the power of compounding, what happened is this person had 10 lakhs of rupees, 1 million rupee, he was having 1 million. He was having 1 million through power of compounding. What it means is that even if you start small, but if you do it consistently for a long period of time, and if you choose the right investment vehicle, you can generate 1 lakh of rupees even with a very, very small investment of 14,000-15,000. It's absolutely possible, right? Now, basics of personal finance. There are 9-point action plan which you can implement between your age group, let's say 20 to 60. This 9-point action plan is very, very common, and you should actually make notes of it, and you should implement it. The first thing is, people typically spend money before saving, but actually you should invert that. First of all, whenever you get the money, first thing what you should do is you should save money. Then only you should spend the rest. Typical amount of money that you should save is 20%. But if you are an actor and all that stuff, or sports person, you can save 95% of it. Yes. If you are a sports person, you can't spend all the money. We talked about Boris Becker, and then we talked about all this stuff, right? In that case, you should save huge amount of money, because your earning period is going to be only for maybe 1 decade, maybe for 10 years or 15 years. So that means your saving rate should be very high. On the other hand, if you're doing a normal job, I think at least 20% saving should be there. Another thing is, you should have an emergency fund. Emergency fund is like a pandemic. Something happens, at least 3 to 6 months of expenses you need to keep it. This you can keep it in fixed deposits or in liquid mutual funds. You can keep it in liquid mutual funds, right? Then you can also buy a term insurance policy. I would say 100 times of your monthly income. Let's assume that your monthly salary is 25,000 rupees. Then what I would say is, multiply it by 100. Then what will happen is 25 lakhs. You should take a term insurance policy for 25 lakhs. That will be the most effective. If your age is, let's say, 24 or 25, maybe the premium will be around 3,500 rupees per annum. So which means 10 rupees a day. At this point in time, you should not take an endowment policy. No LIC, no endowment policy, no whole life policy when you're young, right? Similarly, you should buy one additional health insurance policy, because you may skip jobs, you may change jobs, you may start something on your own. So health insurance policy is very important. Otherwise, what will happen is 2 lakhs, 10 lakhs and all that stuff will suddenly go out. Then you will get into deep trouble. Whereas the health insurance policy, if you take it at a young age, it will cost you maybe 4,000 rupees per annum. 4,000 rupees per annum it will cost you. Maybe once again 10 rupees per day. Nothing wrong with it. Okay. Similarly, don't put all the money in one basket. Whether it's your own company, don't invest all the money in this one. Maximum 20% is what you can put into your business. If you are very sure you will make money, you can go up to 30%. That means if your net worth is, let's assume that if your net worth is, let's say 10 lakhs of rupees. If your net worth is 10 lakhs of rupees, maybe maximum you can put 3 lakhs into business. Same thing with real estate, same thing with mutual funds and all that stuff. So you should diversify across asset classes, and you should also hold cash. Cash is also very important, because sometimes like pandemic time, there will be an opportunity for you to invest. So you can have some cash, 10% of your portfolio, 5% of your portfolio, you can hold it in cash. And you should start early for retirement. In the previous slide, you saw that at least for 30 years, there will be only cash outflows will be there. You should start early. And more importantly, you should do SIP. SIP is called Systematic Investment Plan. Every month you have to invest it, whether it could be 100 rupees per month or 500 rupees per month or 1 lakh rupees per month. I know there are people who are investing 1 lakh per month, absolutely, for your future goals. What are the future goals? That also we saw in the previous slide. Children's marriage, children's education and all that stuff. Do tax planning in the month of April, not in the month of March. So that you can plan it and then do it. There is an option called ELSS, Equity Linked Savings Scheme, where you get 80C benefits. You can invest something like 13,000 rupees per month or 12,500 rupees per month. You can easily save. So that way you can get the maximum benefit out of it. So the last but not of the least is make sense of existing investments. That means you should look at nomination and other things very, very closely. So these are the 9 things that you should be doing it. pretty closely, and this is applicable anybody who is above 20 years and till the date of your retirement, until even your final stages. These 9 important things you should be implementing in life. In terms of asset class, like if you keep the money in savings bank or fixed deposit, you will get only 3%. If you put it in fixed deposit, you will get something like 6%. Today, some small finance banks said they'll give 8%. RBI bonds gives you 7%. Gold can go up or gold can go down. It was $2,000 an ounce some time back. Now today it's around $1,700. 15% has already come down. Real estate can be very flat for some time and suddenly it can go up, and once again it can be flat for very some time and then it can go up. So real estate may, buying a property for your own use is absolutely fine. For your own use, absolutely fine, but for investment, not a good one. Equity carries higher risk, but returns are also there. But here I'll be talking about more in the last section about asset allocation and all that stuff. I'll be talking a little bit more to you, towards you, right? So only thing is proper asset allocation is required. That's where you will make 92% of the returns. Only 8% matters on where you invest, which scheme you are going to invest. So don't worry about which one and all that stuff. So what is very, very important is that at some point in time, some of them will be very attractive. Wherever it is attractive, at that point in time, you have to invest. For example, equities. During pandemic situation, you should have invested a lot of money. Next year is going to be kind of recession. If the market is going to correct and if it's a long-term horizon, definitely you should invest in equity. And similarly, what is very, very important is you should look at SMART goals. What is SMART goals? SMART goal is specific goal. Specific goal means these are the specific goals. I want to buy house purchase. I want to go for annual vacation. I want to have a car purchase. I want to save for a child's marriage. So that means you have a specific goal in mind and it should be measurable. That means for retirement corpus, I will have 1 crore of rupees. I will have 5 crores of rupees. This is very much measurable. Then next one is children's education. For children's education, I will plan for 30 lakhs of rupees. So that is measurable. The most important thing is attainable. If I am going to make only 25,000 rupees per month, can I plan for 5 crores? Not possible. So that means you need to have a attainable goal. But only thing is your salary will increase as the year goes by. And the next one is it should be a relevant goal for you. Don't look at irrelevant goals, having a vacation home in all different cities, not possible. So look at relevant goal. And more importantly, time-bound goals. All the goals should have retirement corpus when I am going to be 55 or when I am going to be 48. I want to retire at the age of 48. So those are the kind of goals that you should be doing, and these are the kind of you need to have a plan for you to achieve all these things. Correct? That's what is very, very important. Investing without a plan will take you nowhere. The plan should exactly say when you need the money, how much you need, what are the risks you are willing to take. Higher the risk, higher the return. Please note, no one gives loan for retirement. No one gives loan for retirement. If you want to take a house, they'll give you a home loan. If you want to study further, they'll give you an education loan. If you want to buy a car, they'll give you a car loan. But if you say, I want to retire, they won't give you a retirement loan. Not possible. But if you have a house, you can go for reverse mortgage. That is possible, right? Now, what do you do with the existing investments? It's very, very important. First thing is nomination. So before marriage, what you would have done, you would have kept your parents as nominees. After marriage, it's important that you can make your spouse as a nominee. That's very, very important. Check all the bank details, including address, check number. Sometimes your your status will change. For example, you will be having a normal SB account. Now, what will happen is once you go abroad, you should make it as an NRO account. That is very, very important. You have to make it as an NRO account. And another thing is check your addresses. See, for example, you would be studying in Chennai, you would be working in Delhi and all that stuff. Check your addresses. Make the address change in Aadhaar card. And more important is each and every investment that you have should be linked to the previous goal, one of your goals. This is towards my retirement. And most importantly, put all documents together. During the pandemic, several people lost their life. We don't know whether all the documentation was there. You'll be surprised to know this. Around 16,000 crores of money is lying with bank without knowing whom to give. They don't know where is the nomination, who is the nominee, address is wrong address. 16,000 crores is lying in fixed deposit receipts without proper address, without anything. They don't know whom to give. Same thing with LIC. With LIC, 18,000 crores. Policy got matured. They don't know whom to give. So put all the documents together, Let your loved ones know about it. And more importantly, passwords. So like even your mobile password or your email password and all that stuff, online login, everything has to be put together, and you should share it with your family member, not everything to everyone. Because unfortunately, if anything happens, they should be able to retrieve. Otherwise, you will be contributing to the 16,000 crores and 18,000 crores, correct? And most importantly, you should know what is CAGR. That's what I'm going to talk about. It's called compound interest or compounded annual growth rate. So for existing investments, you should be doing it. I'll be giving you one very specific slide, like how you can beat the inflation and all that stuff. Pay attention to that particular module. Maybe 3 modules from now, I'll be talking about it, right? Or it could be even the next module. And most importantly is, don't do any unplanned investment. Don't do any emotional ad hoc investment. Don't do tax season investment. Don't do it. Like taking an insurance policy, committing a huge amount of money, no. And don't always reach out to your relatives and friends, because their age, their risk profile, like their experience is completely different. Today we talk about Bitcoin. Today we talk about cryptocurrency. Today we talk about online investing. Like today people mimic banks. People are losing money by investing online, mimicking the banks and all that stuff. So don't go as friends, as agents and all that stuff. Okay, don't think always a bank RM will be working for you. He's a very good person. Honestly, he's a very nice person. But unfortunately, he has targets. Because he has a target, there could be some sales pitch will be there. You are an NRI. You'll be coming from abroad. Being an NRI, once you walk into the branch, he will try to sell so many things which may not be applicable for you, may not be relevant for you. Don't go for the latest fad, okay? So 50%, Bitcoin is down about 50% in the last 13 months, right? Don't go by herd mentality. Because my friend made money, I will make money. He bought a flat so-and-so place, I will also go and buy a flat. Don't go by this. You will be losing money. And don't take too much of loans in the working life, because you will start paying EMIs, right? So only 40% of your take-home pay, 40% of your take-home pay can go towards EMI, not more than that, okay? So these are some of the important pointers that you should be doing. And don't buy stocks on tips. Tomorrow Tata Motors will go up. Tomorrow City Union Bank will go up. Don't buy stocks on tips. More importantly, today a lot of information is available in the Google for free. There is one website called Parent Circle. In case if you want to share it, you can share this. Right now, this is absolutely available for free. There are a lot of articles, I talked about health, wealth, and relationship. This person talks about health. He has given a lot of videos and all that stuff you can do. And a lot of things are available for free. Please invest your time, learn, and more importantly, implement. And let me do a quick recap of all the nine points. First thing should be your savings. So don't spend and then save. First save, then spend at least 20%, minimum 20%. If you are a sports person, 95% you should save. Emergency fund, 6 months. Term insurance policies must. Health insurance policies, very, very important. Diversify. Don't put more than 20% into your business or 30% into your business, correct? Real estate, don't lock everything into this. Start early for retirement. SIP, systematic investment plan for smart goals. Tax saving in the month of April. Tax planning is ethical. Make sense of existing investments. This is what we did. What are the 3 objectives of personal finance? How will you protect yourself? Live and let live. That means, and your family. That's why very, very important. Your loved ones. And how to plan and achieve future goals. This is what is pretty, pretty important. By even saving 10 rupees, 100 rupees per day, you will be able to save huge amount of money, okay? And how to plan for your financial freedom is most important. That is what is very, very important. Thank you very much. I hope you got a very good basic on personal finance. Thank you very much. Thank you.